I'm Kostis Tselenis. I'm a senior investment professional with a focus on sustainability and impact investing. I'm working with Quadia, a pioneer investment manager with a focus of allocating private and institutional wealth into impact strategies. This is probably the phase where a company faces most of its challenges, and this is also the reason why the mortality rate is very high in early ventures, right? I would say governance as first. This is the biggest one. How do we get the right people on board? How does an entrepreneur, a founder, the one that has the idea, identify the right partners, external or employees, internal or investors at the same time? It's not all about getting the money, it's also getting the right investor on board. So governance is the number one issue. I feel that what I always say, the second one is the access to market. There's practically everything out there today already. So in order to be able to penetrate and get into the market with the product or the service that you have, or the investment strategy, if you're a fund manager, for example, then you need to put a lot of effort. So those are the main two challenges that I would identify for early ventures and early entrepreneurs. The impact businesses have all the challenges that early ventures have, and on top of that, they also need to convince on impact. They need to have the process, they need to have the metrics, they need to have the strategy of how to generate, report, monitor. All these aspects on the impact side are another additional challenge. They need additional capacities, they need additional knowledge, so probably they have it a little bit more difficult. So first of all, I think that fundraising should be an integral part of a company's strategy. It's not a one-off, it's a continuous process. You have to embed it in your overall strategy. The absolute priority is to be very well prepared. So you have to have a very good preparation before you go to any investor. First of all, you have to identify the investors. Secondly, you need to have done your homework. And at the end of the day, you need to convince as a person, as a team. You need to be inspiring. You need to communicate the comfort level to the investors by showing that you're an expert and you have touched on all the possible answers to his questions. So good preparation is the magic word here, I feel, and good planning. So you need to do it professionally. Absolutely. I think it's all about people and product or service. I feel that highly skilled people with a good product can literally do anything. That's where it starts. So I would focus on these two items as an investor anyhow. It is a gut feeling at the end of the day. And this comes only with long experience. You have to have seen a lot, you have to have heard a lot, and then over time you develop that skill of maybe knowing. Investors don't know everything at once at the beginning, that a venture has a little bit more potential than others out there. But I think it links again to people and chemistry to a certain degree. So those are soft factors. Equally, again, I'm very technical and I'm a very, very big supporter of good preparation and good documentation. And think about it, nowadays, today's entrepreneurs have that magic advantage, if you wish, of having the internet and having so plenty and limitless resources on anything, on other ventures, on how to put together their documentation. They can attend webinars online. So this is something, for example, that the entrepreneurs of the 80s or the 70s didn't have, or even the 90s. So I think it's inexcusable for a team or an entrepreneur or a founder to come unprepared to an investor, or even if you disconnect it from the capital providers, to not have done the homework, not have done the business plan, and have touched on all the potential risks and aspects that a new venture will face eventually.